Let me now welcome in our special guest this morning. He's a veteran trader, renowned technical expert and author. He's also the one who called Bitcoin's $20,000 top back in the day and is predicting it's going to come back to the fore again. Peter Brandt, founder and CEO at Factor LLC, joining us on the show today. Peter, great to have you with us. Let's just kickstart by discussing or getting your view rather on, global equities with the U.S. Set at those all-time high levels. We've gone past that discussion of whether or not we're going to have a recession. How much more strength are you seeing in the trend over there at the moment, or globally as we speak?
Oh, I see a tremendous amount of underlying strength. As a matter of fact, based on what I look at in markets, which are primarily the externals, that is the charts. I'm not a fundamental person. I'm not looking at those types of things, but I'm looking at the market itself. What's the market itself telling me? I think market's powerful really across the globe. I see substantially higher levels on equity prices in the US, in Europe, in Asia, in India. I think that we are somewhere perhaps in the middle of a sizable up move off of the December 2018 lows. It should take markets, propel markets substantially higher than the levels we're currently at.
Great to hear, Peter, that you're sounding so incredibly bullish. Global Dow Jones Index, what are the trends you're observing? If you could just share a few more details on where you're seeing that strength particularly.
Well, I think the Dow Jones goes to 33,000. I think we'll see the S&P somewhere in the 3,400 level. We'll continue to see tech lead the markets. Perhaps healthcare will kick back in, but primarily tech. And we're going to see an awful lot of leadership, I think, from not only India, but especially China. I have just felt for a number of years that this century really will be the century of Asia. We're early in that century. We're 19 years into it. But we're going to see China here lead for the next several decades, and that will be reflected in substantially higher equity prices in China, a much stronger economy in China. China has a way of having problems and then finding solutions to problems. That should not change. And of course, a stock market like India is bound to benefit from that, as well as leadership from markets like Taiwan, Korea, and especially Singapore.
Right. Peter, so any risks that you foresee in the near term? I mean, are we headed for a sustained rally, or do you think we're topping out?
No, we're not topping out. We're going to see the market climb a wall of worry, which is actually the healthiest type of advance we can have. There is certainly plenty of bad news out there. We can talk about slowing economies. We can talk about debt. We can talk about uncertainty on trade wars. We can talk about currency wars. We can talk about Brexit. We can talk about a whole number of variety of things. But the reality is that that's kind of just things that make this market climb a wall of worry. Markets that climb walls of worry tend to go a lot further than anybody might think.
Right. Also, Peter, how is it that valuations are looking to you? Because when one looks at the benchmarks, it looks relatively at the top. It looks a little bit stretched. But again, this dichotomy in the market is playing out, wherein the broader markets are still lagging.
Well, the valuations are a little rich, of course, but, valuations have a way of catching up on themselves. I mean, especially if we turn back into a robust economic situation. Europe has kind of been bogged down in their stock markets here now. A number of them have not even taken out the 2000 highs yet. Markets like the CAC, the FTSE is just barely crawling into new highs. It's been stuck in a trading range now for almost 2 decades. Of course, the DAX has had a little bit more leadership than some of the other European countries, but we start to get the European economy back on track. We start to solve some of the issues that are overriding the Chinese market. I think people might be surprised at how strong the global economy could be. And as you get that, right now valuations are a little bit rich, but you get an economy that's back on track, and the current valuations could look awful cheap if the markets are where they are right now in 2 years from now. So valuations are for right now. I'm trying to look down the future, and down the future, things look very rosy to me.
Hi, Peter. So that clearly indicates that you do seem to be bullish on, emerging markets as well. So what's the pecking order then within developed markets?
Yeah, within the DMs, I would have to go with the U.S. as number one, and I include China within the developing markets. I would certainly think that India is really in the number one position there. I like India. I actually like Mexico as well, and so. But India and Mexico would be probably my number one and number two ranked developing markets to be looking at in terms of having ownership, extended ownership.
Peter, can't help but also understand your view on crude oil prices in terms of the kind of uptrend that we've been seeing perched at 5-month highs. What are the charts for crude looking like? More upside?
Yeah, I mean, we're going higher. Crude got way too cheap, and crude tends to be a yo-yo market. It goes from feast to famine, and we get tight supplies, and the markets has major advances, and we tend to get a production back online, or economy that's soft, and we see the market sell out. But crude's going higher. I'm looking for Brent to get back up into the mid 70s, maybe the high 70s. I'm looking for West Texas Intermediate to probably breach the $70 level, move to 71, 72. So from there, I'm not exactly sure what would happen, but I think the current rally in energy is likely to continue for perhaps another 10% up.
All right, so see a rally in crude. What about gold, Peter? Mild uptick, particularly also post, the Fed's latest minutes. Is that something we should be looking at?
Well, crude, like I say, I think crude goes higher. Gold, I'm a little bit confused on gold. I wish I had clarity. But there's too many people talking about a new bull market in gold, and I certainly can make the case on the chart for that. But there's something about the gold market that just doesn't feel right to me. So gold market, of course, has been a big, broad trading range since 2012. We've been up and down in this gigantic trading range. And I guess I feel that gold is not ready to break out of the trading range we've seen in recent years. And, we tend to be toward the top of that trading range right now. But gold is going to have a hard time clearing the $1,400 level.
Okay, so back to indices, Peter. We've got the overall sense, the global context, developed markets, but let's also just focus on the Msci Emerging Market Index for a moment and get a sense of how that trend is looking to you.
Looking bullish. I mean, I like emerging markets. I like emerging markets substantially. That would include, as I mentioned before, that would include Mexico, that would include India with the Nifty probably heading up to 12,700, 13,000, Nifty Bank Index up to 33,000. As I mentioned, I like Mexico, but I think the emerging markets, and I of course, I include China as a developed market, not an emerging market, but yeah, I think the emerging market space is in good position. And so I just see global markets, whether they be developed markets or emerging markets, as being higher in the months in next couple of years.
Right. Peter, in India, and especially on both the index as well as the bank Nifty, tell us about what you're seeing on the charts and why is it that you're so bullish?
Well, I mean, let me point out something as a chartist, and that is that the Nifty has been in a 16-year parabolic market. If you chart the Nifty, what you find is this advanced the Nifty since really 2002 has been parabolic. It is going up at an advancing rate. That to me is a sign of extremely constructive future. And so I think what we're going to see is the Nifty continue to be strong. Of course, you have some political things going on there right now, but political things have a way of kind of getting behind us, and they create some worries, but they have a way of getting resolved eventually. I mean, the marketplace will sustain itself sometimes through political uncertainty. But I would be looking for the Nifty to continue this advance. And again, I think my targets in the Nifty would be somewhere in the area of 12,700 to 13,000, perhaps on up to 14,000 over the next couple of years. I think the Nifty Bank Index, extremely strong, looking for 33,000. Now, when you start getting into the smaller stocks, I don't see the same strength there. I like the bank index. I like the private bank index. But some of the other subcategories, the mid-cap stocks, not as strong as the big stocks. And so I see the strength in banking. I see the strength in the big powerhouse stocks. I don't see the same level of strength in some of the lower tiers in the Indian market.
Right. Now, Peter, given that you had predicted the top for Bitcoin, what exactly is your sense right now?
I think the Bitcoin market is in a really unique position. I think Bitcoin market is bottomed or is bottoming. The just above the 3,000 level was probably the absolute low of Bitcoin. I'm extremely constructive on distributed ledger technology. Really, the Bitcoin itself. I'm not attracted to the other macro caps. I'm not attracted to the altcoins. I think they're gimmicks. 95+% of all coins that are being traded today will end up worthless. And so my focus is on Bitcoin. I think Bitcoin is a legacy coin. I would be looking for Bitcoin in the next year to year and a half to challenge that 19 to 20,000 level. And I'd be looking for Bitcoin then in the next 5 to 10 years to move on up to 50,000, potentially as high as $100,000.
Peter, it's been a pleasure chatting with you. Thanks so much for giving us a sense of the India story, the global trends, as well as a word on Bitcoins.